With Powell signaling today that um, further rate hikes are going to be data dependent, basically leaving the Fed open to halting the rate hikes. We've got a bearish engulfing candle in the dollar here. Looks like we're trying to get a little follow through this evening. So we're starting to possibly play out that scenario that I have discussed in my prior currency videos. We've got the move down into the daily cycle low. Here we have the bounce out of that cycle low. Now the key is whether or not this second daily cycle is going to left translate. The opportunity is there at this point as the Fed has, again, like I said, made it clear they're ready to, or they've opened the door anyway for them to halt the rate hikes. And I think that's going to be the end of the dollar rally once they do. So if over the next several days, if the dollar comes down and if it breaks below this pivot at about 96, this is a daily cycle low. A break below that will confirm a failed and a left translated daily cycle, and that will indicate that this intermediate cycle has topped, and that would confirm that the intermediate cycle, the larger cycle, is also left translating and rolling over. And in a left translated intermediate cycle, the odds are very high that it's going to break below the previous cycle low of the same degree. So this was the previous intermediate cycle low here. So the next, let's say the next week or so is going to be critical. If the dollar breaks below this pivot, this cycle low right here at 96, then there's almost no hope at that point to resurrect the bull market scenario. A break of this pivot this early in an intermediate cycle is almost a guarantee that the dollar is indeed caught in a long-term bear market, and that this rally out of the 3-year cycle low. Let me widen the chart out. All right, so this is the rally out of the 3-year cycle low. You can see we have one intermediate cycle here, bottom here. We're starting the second intermediate cycle. It's made a marginal new high, but it's not even vaguely close to taking out the bull market high, which is a big warning sign. We're already deep into this second daily or second intermediate cycle. It's already threatening to roll over, and we're not even close to making a higher high and confirming a bull market. So the next several days are going to be critical. If this pivot gets taken out, then you can almost bet the farm that the dollar did start a bear market, and then we should have the very long-term cycle runs about 15 years. We're about 8 years into this, so we should have about 6 or 7 years in the cyclical bear market before we get a final bottom. So the next several days are going to be critical. If this breaks, then it's all over for the dollar.